Welcome to the Fresh Start Podcast, where we discuss debt management and financial wellness. Here are your hosts, Lionel and Stacy.
Hello, everyone. Welcome to Fresh Start. My name is Lionel, aka Smitty, and she is attorney Stacy, aka Hoppy, and welcome to Fresh Start. Today's episode is about payday loans. And the reason we chose to do this, because we briefly mentioned this in our first episode, but we had some feedback from listeners who wanted to have more information about this subject, and we decided to do an episode on it. What exactly are payday loans?
Payday loans are basically short-term loans that are designed to kind of help you deal with an emergency situation. For example, you have a vehicle that needs to be repaired and you don't get paid until 2 weeks from now, but you need the repairs now. So the loan is kind of designed to give you the money you need to pay for the vehicle repairs. And then when you get paid, you pay off the loan. That's what you're thinking is going to happen.
Okay.
And that's maybe what you're hoping will happen. Mm-hmm. But again, life gets in the way, other things happen, and you don't have the money to pay it off. And you can't pay it off when it's supposed to be. Or the loan itself isn't designed for you to pay it off when you are prepared to pay it off.
Right.
A lot of them have, inside the loan documents, they'll have rollover fees and additional costs, because keep in mind, they want you to continue to roll it over. They never want you to pay it off. They want you to continue to renew that loan each time that it comes up for renewal, because that's how they make their money.
So once upon a time, banks would loan you microloans, basically anything up to $1,000.
Yeah, small loans.
But a lot of banks have gone away from that. So somebody had to fill that void.
And the reason they kind of went away from it was because it wasn't really a moneymaker for them.
Of course not.
They would have to charge, the interest rate they would
so
have to
low.
charge would be such a small amount, because states have kind of regulated how much interest a lender can charge you. So for a $300 or $400 loan, how much would the bank make?
Nothing.
$40,
$50.
So it's really not worth their effort to go through vetting clients and credit checks and documentation. It wasn't worth it for them to do.
Got you. So somebody, of course, saw an opportunity and stepped into the void. And that's where the payday loan industry came from. So basically, they're easy to find. Do a Google search right now on payday loans, and guess what? You're going to see a ton of options pop up. You're going to see very nice, flashy websites, and they're going to have things such as apply right now in 2 minutes. There are no credit checks and all of that. All of that is true, but it's also designed to take advantage of you in a moment that you have some sort of an emergency that you have to deal with. Because guess what? These loans come with between 300 to 1,000% interest. So think about what we're saying. So we're talking about you borrowing, maybe the average loan might be $400 to $500. But at the end of the day, after the interest and the rollover, which is what Stacy mentioned earlier, the rollover meaning, hey, something else came up and I know I'm supposed to pay this amount this week, but I can't. Can I roll over my loan? Oh, yeah. They encourage you to do that because you incur fees to roll it over. So for a $500 loan, don't be surprised if you end up paying $2,000. That's why if you've done this currently, or if you're even thinking about doing it, don't. You're in trouble and you need to come and see us. Give us a call. Let's talk about it, because even though the payday loan folks will make it seem like there is nothing that you can do to stop this, the truth is there are things that you can do, because we have clients who come to see us who have multiple payday loans and
that's the real trap.
Right. Because it's a debt trap. It's like you keep spiraling and you're trying. The people in this right now, you know exactly what I'm talking about. You know exactly what I'm talking about.
You got one loan, it filled the gap temporarily, but now perhaps your rent is due and something else has occurred. So now what do? You need another loan.
Right.
So you go and get another loan, and it continues, and you're just basically taking one loan to try to satisfy or keep the previous one in good standing, in addition to trying to handle and pay your monthly bills.
Right.
It's
So
not possible to continue to do that.
of course not. And why do you think they make it so easy for you to get? Think about it. They tell you 2 minutes to fill out this application. They tell you no credit check. And then they tell you, yeah, we will deposit this money into your account by tomorrow. Think about it like, Okay, so what does that mean? So guess what? You, in order to get the loan, you've provided them with your job, your social, when you get paid.
Your bank account information
because of course you have to receive the loan. So now they know all these things, and they're going to debit you for that loan on those days that you've given them. So they have all this information. So you don't control when they go into your account to take it out. You're hoping they do it on your pay dates, which would kind of make sense. You know, you got paid today.
And most likely they will, but the problem is you don't have enough money. That's the problem. That's why it becomes an issue. You don't have enough money because you're already, I don't think you have come to terms with the fact that you're already over your head.
Right.
And you're just taking that loan to try to fill a hole, but you're digging another one.
These loans are designed for people who can least afford to be in any more debt than they already are. They're designed to catch you when you're emotionally unbalanced. You know, when that car breaks down.
That emergency medical bill.
Your kid gets sick.
You're sick.
You're sick. Exactly. They're designed to catch you when your emotions,
when you're
vulnerable, and they take advantage of you, and you end up paying 3 to 4 times more than you borrowed. They target you because they know you're stressed. You're living paycheck to paycheck, and there is no room for error when you're living paycheck to paycheck. There's no room for error. Everybody is stressed. So basically, they know that if you're loan shopping and you're at a payday loan site, they know that all your other options are probably exhausted. That means they think you've already gone to your bank and your bank has turned you down.
Oh, they know all of that.
Right.
That's why you're there.
Your credit union has turned you down. You have nowhere else to go. Friends and family, maybe. But if you're there, they know you're in trouble, and they know that you're going to agree to almost anything because you need to get that car fixed, because guess what? You don't want to lose your job. So you're going to do something about it. So let's say you're borrowing $300, and when you look at that truth in lending statement on the website, they tell you you're going to...
If you even look at it. Let's be honest. You need the money.
Yeah.
Whatever terms they give you, you're going to take them because you need the money. You're thinking optimistically that something's going to work out. You're being hopeful that something will... You're not going to pay attention to that. You rarely read those statements.
Right. So what they do is in the fine print, they hide the rollover fees because that's where the real money is. Because let's say you borrow $300 and with the interest rate they're telling you, you're paying back $390. Listen, if I'm in a jam,
sounds reasonable.
I'm going to take it.
It's high, but cost of doing business.
Hey,
I need it now.
Things happen. So fine. But what they don't share with you in the bold print, but in the little tiny print, you need what you call that thing? Magnifying glass to see. That thing, the part that you need the magnifying glass to see is the part that they tell you that they're going to be maybe $60 or $75 every time you roll the debt over. So in your mind, you see $75 come out of your account. Your assumption is that $75 is going towards the balance of your loan. Meanwhile, that $75 is the fee to roll it over. You haven't even touched the principal of it. The high interest rates are bad, but that's just one part of it. The main part of what happens is for those people who can't pay the loans back in time, and you have to do that rollover because that's where the real money is. You're what you always say, robbing
Peter to pay Paul.
Right. So if you don't want to do that, or you don't want to live that way, because frankly, nobody should live that way because it's stressful. Can you imagine your paycheck coming in and you're short a couple of $100 for a loan every week that doesn't seem to be going down? So if you're in that cycle, or if you're thinking about getting into that cycle, please stop.
Talk to someone.
Talk to somebody. Give us a call.
And another thing to think about too is that not only are those loans available on the internet now, there's some finance places that also provide those types of loans.
Right.
And there are now loans that are just available on your phone via an app. So they're reaching everybody.
Right. And
they're reaching everybody the same way with the same type of loan.
And guess what happens? I know you might have heard that states regulate that level of interest rate.
Because payday loans traditionally, the old school payday loans don't exist anymore because the states have pretty much kind of put them out of business. The old school payday loan used to be, you go into one of these check cashing places, you take in a check and you write out a check. Let's say they gave you $300. You'd write out a check for $375 and you'd give it to them. You would get your $300, and on the date that check is supposed to be deposited, they either deposit it and get their full amount, or you come back in and say, no, I can't pay you now. Here's another $75 to roll it over. So that was how these loans started. And most states have said, no, you can't do that. That's just a trap. You're taking advantage of people, all the things we just talked about. So most states have kind of eliminated that.
So what's the workaround that they found?
That's why you find them online. And the reason you can do it online is because if you look at all the fine print in your loan or look at the bottom of the website, you will see almost every one of these companies is located on some Indian reservation somewhere in the United States.
And the reason they're located on the Indian reservation, because the Indians have sovereign immunity. And what that means, not being fancy, what that means is with sovereign immunity, they don't have to follow state law because how they do business on the reservation is under tribal law.
Right.
Now, what we're talking to you about coming to see us about, it's about federal law, because federal law always trumps state law. So if you're in that situation, please come and see us. Talk to somebody. Trust me, you might think, well, I can get over this and whatnot. But you can't.
You really can't.
It's designed for you not to win. And you know what I'm talking about. It's designed to take advantage of people who are stressed, people who are struggling, and people who are living from paycheck to paycheck.
People who are desperate.
All right. So, last point. If you have not done this and you're thinking about doing this, you need to come and talk.
You need to come see us.
Exactly.
You need to come see us before you make that decision. There are obviously other issues that you need to address financially. There are other debts that need to be managed. So this isn't your only problem. And that's why you need to come see us, because we can help fix all of those financial issues.
Right. So I'm not blaming anyone for doing what they have to do, because if I was going to lose my job and I needed to do something immediately and this person will have cash in my account the next day, chances are I will take the loan also.
Of course.
But that's what they're banking on, you being emotional and taking that loan. So wrap it up for us.
Basically, it's not too late for us to help you get out of the situation that you're in. Those loans, as we just said, are designed to look attractive. They're designed to make it appear that they could solve the issue, but they rarely do. So please come see us. We have 3 locations in the Metro Atlanta area. Consultations are always free. The only thing it will cost you is a little bit of your time. So please do come see us and let us help you get the fresh start that you deserve.
Thanks for listening, guys, and we'll talk to you next week.